As I said, it's a pleasure to be here, and I'm absolutely really excited about kicking off today's content. And really, I'm going to be talking around a couple of the key trends that we feel as Facebook are really important to the financial services industry. I think it's first of all really key to say that I'm absolutely passionate about helping financial services brands connect to their customers. But I think it's becoming more important to be able to do that in a human way. I think, money, after all, it creates a sense of great joy, but it can also be a great stress. And so really it's up to us, I believe, as brands to, bring back that human element. And I think from a Facebook perspective, it's really our role to help, create those meaningful relationships and connections. Not only regarding the products and services that financial brands and institutions offer, but also helping to address some of the wider social issues within the space, such as financial literacy and inclusion. So with that, a brief note on myself. So I'm a client partner as part of our financial services partnerships team here in the UK. And my background is I've been at Facebook for around 2.5 years. And prior to that, I have been working in agency side for 10 years, working with the likes of Aon and BGL Group. At Facebook, the core of my role is really to help brands develop, long-term brand success, in addition to maximizing the commercial and sales impact that they can have. Outside of work, I'm generally quite a keen, moviegoer, which, given the current context, has been a little bit trickier than usual. But, I welcome getting back to the cinema as soon as possible. So in terms of today, I want to start off with a little bit of a story. And, once upon a time, finance was friendly. The days of having a financial advisor who we knew, cared about us, listened to our worries and hopes and dreams. And also, the core service there is really a place for our, for us to deposit our money. But ultimately, we felt, quite connected to our local branch. And it was a place where actually, overall, financial services and banking felt quite personal. And actually, from a Facebook side, we feel that brands are trying to recover this and return to this level of service. I guess the key difference now is that consumer behavior has changed dramatically. We're quite time poor, but ultimately we're digitally savvy. And that really lends itself to digital propositions rather than traditional bricks and mortar. And and what's really helped to accentuate some of these trends is the globalization of finance. The expansion of 24-hour markets and opportunities. Looking back to the last sort of 2007-8-9 financial crisis, we saw quite a big split in the financial industry, but also this really rapid emergence of new fintechs, giving way to new propositions and the unbundling of some of the traditional propositions that financial institutions and brands used to offer. And, this is, and as, we'll continue to see the development of fintechs over time to address some of the emerging challenges that we're seeing in market. And I guess as part of today, I'll come on to talk about some of the other trends that we're seeing, which are kind of, helping to perpetuate, the emergence of new brands and how they're servicing, the new expectation that consumers have of services. But it's, it's not just, we haven't just seen a shift in the industry, but also in our own consumer behavior. And I guess the question is, what is really driving this? We see a lot of regulation and a lot of the introduction of new technology. And more broadly thinking, it's really this kind of development in technology which helps to define our behavior moving forwards. Just to take it back a little bit, we saw the first cash point actually introduced in 1969. And we were introduced to this idea of 24-hour cash, and that was previously our normal. What we're seeing now is, we're using our smartphones and our Apple Watches to pay for restaurant bills, and that's become our kind of new normal now. I guess the consistent theme here is this high expectation of service, no matter where we are or what we're trying to do. And I guess ultimately, we want to manage our finances on the move. We want our phones to be those branches, but also, we also want them to be as safe and secure as what bricks and mortar offer and what branches once were. So I think we all get it, and I'm definitely not the first person to speak in front of a large group of people and talk about the importance of mobile. It's been something that's been talked about quite profusely for the last sort of 10 years or so. But actually, what we are seeing is mobiles do increasingly begin to rule our lives. I just have to look at my own behavior in lockdown, for instance. I'm spending an increase in, a huge amount of time speaking with my friends and family via, wherever it be WhatsApp, Facebook, Instagram, other messaging apps, more so than ever before. And I think, as society moves to such a rapid pace, it's really the role of brands to create a connection in the channel and in the language of their customers. And this has never been more important. We look towards the end of this year and to the start of next year, and the forecast that you will have over half of humanity connected to the internet. That's an incredible achievement. And with that comes, the around sort of 3.5 billion worth of smartphones in existence. So I guess the question really is for brands is, how will the automation of services plus the internet and the introduction of more smartphones, what sort of opportunity will that create? And what sort of role do we as brands really want to play? And just to illustrate this kind of rapid evolution, what we have here is using IPA touchpoint data, which is probably the most robust UK study into media consumption. It really allows us to visualize the enormity of the shift. So what I'm showing you now is the average time being spent by media channel in 2014. Now, if we fast forward just to today, and actually this is 2018 data, we've seen a considerable shift in time being spent. A considerable amount of time being spent across Facebook and Instagram, but also the mobile internet in general. And really that's been perpetuated by mobile. And actually, with so many people accessing the world digitally, we generally feel that it's attention which becomes the real currency and value in terms of, that being the most important thing that we as brands need to consider. And so this really brings us on to some of the key trends which I'm going to touch upon today. We've established for us that mobile is key and attention is the new currency, but exploring what this means for financial services brands. And I think the first of these trends really pertains to exactly to what I've been speaking about so far, the fact that mobile is everywhere at all times. And another trend which we'll touch upon is this idea of personalization at scale. It's no longer acceptable, I think, from a consumer standpoint, to go out with these broad communications. And personalization isn't just, me talking to you in terms of a copy being slightly different, but actually these interactions that we are craving for, whether it be the likes of Messenger, for example. And finally, the final trend, which I'm going to touch upon, is how mobile has overall increased our expectations fundamentally. And it's ultimately changed the way that we interact and discover new brands. And with that comes increased consumer expectations. So again, in our daily lives, this idea of all mobile all the time. We're busy interacting with everything more than ever. And actually, as I said, attention really is this new currency and new economy. And just to illustrate that a little bit in a bit more detail is, the rise of mobile is probably the most underhyped hype of recent history, mobile capabilities have permanently changed our expectations, such that people now expect their mobile phones to be a one-stop shop for all of their financial services needs. And they're also beginning to play a critical role for some of the larger financial institutions, and also in the roles of our consumer lives in terms of, when we are, looking at research into purchase a home, or, home planning or planning for retirement. And this is especially true for mobile first or mobile only younger audiences. And it wouldn't be, one of the big trends we're seeing in terms of, future audiences is obviously Gen Z and millennials are a big part of this trend. I guess more broadly referred to as kind of digital natives, or, those who have never known a world without apps and smartphones, don't see a difference between in-person communications or digital touchpoints. And I think that's really key for brands to understand. Anecdotally, in fact, that when we surveyed, these audiences in terms of what was important to them, they're actually placing Wi-Fi above water above food and water in their hierarchy of needs, in that traditional structure, which is, both quite entertaining, but also, it's a shocking realization in terms of how important connectivity is. But with these with these kind of developments in these areas comes the higher expectation that personalization doesn't necessarily mean face-to-face. As I said, digital natives have grown up in a mobile area, and they expect brands to speak to them, in a personalized way. And this is especially true when it comes to finances, with nearly, up to 48% of Gen Z having a money or payment app on their phone. And actually, with millennials accessing financial institutions up to 8.5 times a month via a smartphone or app. And with all of this, again, is the theme that, we want to feel that we're being addressed and considered as an individual, without giving up any of the modern conveniences that we've grown accustomed to, again, with reference back to that trust and reliability that branches used to bring. Those expectations have baked into, mobile first world as well. And as mobile continues to rise, it presents a great opportunity for financial institutions to connect with people where they are. Up to 64% of consumers, plan to use a mobile wallet in 2020, and that's up considerably from last year, with a 39% rise in the consumer base. Furthermore, 90% of people believe that mobile will be the primary source of their banking communications in the next 5 years. And we really think, what is it that has helped to perpetuate some of these trends? And, we have to look back to, we have to look forward to Fintechs, who have, kind of spurred a new movement towards speed, convenience, and customer service, building on what the traditional banks and incumbents put in place. These newer companies have recognized the market opportunity to serve mobile-first customers, demonstrated by the introduction of disruptive business models that ultimately try to eliminate unneeded expenses and have a greater focus on capitalizing some of the customer data that they aggregate. For example, a lot of fintechs are offering quite attractive proposals to millennials in the form of, whether it be wealth management, repurposing some of the, the traditional student loans, or actually looking to consolidate some of the multiple pension pots that, that workers now have. I, for instance, have multiple pensions across all the companies that I've worked for. And actually, it's some of these fintechs which are kind of understanding where that gaps and those frictions are to develop new products to better serve customer needs. But it's not just that the fintechs sit alone in developing these new technologies. We see a lot of big, established brands and banks partnering with fintechs to kind of allow this technology to bleed over into more traditional services. With a lot of brands actually partnering with fintech models to create almost fintech incubators to add and innovate on traditional services. And I think, the point here is that ultimately, to remain successful, financial institutions need to meet their customers where they are, and that is fundamentally on mobile. People are increasingly researching and engaging on mobile, and this isn't just for the occasional transaction or engagement. It's for financial transactions across the board. 83% of people, as outlined here, have applied for a new credit card online, and actually 43% of people use mobile to both research and shop. And actually, what we're seeing is, we're in this kind of really service, in this economy of really high service expectation. A lot of these customers will opt out for a card if the mobile app doesn't serve their expectation. So it's working in both ways and both dynamics here. And actually, this kind of brings us onto our kind of second key trend, which is this idea of personalization at scale. And I'd normally ask for a show of hands here to see actually who would be more likely to buy for a brand with personalized communications. But actually, what we see is that, from surveying users, is that 71% of customers and consumers will actually will gravitate towards a brand that has a personalized comm structure, and actually that does help to encourage purchase behavior. And it isn't just a should or is it a consideration, but actually what we're seeing is personalization is a must. And this is especially true of Gen Zers, in fact, with 73%, asking for a more personalized banking experience. We know that, these expectations may be daunting, but it does offer the ability to bring in innovation into your customers' everyday lives to solve some of the more extreme problems. It also enables you to provide better and more valuable services. And as our technical capabilities mature, so will the opportunities we've seen in the past as well, they begin to grow exponentially. And already some of the top brands are investing in AI to give you recommendations on how you should spend and save your money. Services like these aren't just personal, but they're also incredibly valuable. So much so that we've seen a marked shift in it in terms of everything from a consumer standpoint to be demanded for free, but actually consumers are willing to pay on a subscription basis, pay premiums for those brands, which are helping to facilitate some of these demands. It's this ability to drive a greater customer experience that makes people feel seen, heard, or catered to. And ultimately, that helps to solve some of the loyalty issues that we've seen, not just within banking, but across the board for financial services verticals. Again, this works on two hands, and unfortunately, the immediacy of mobile does mean that if a consumer does encounter a negative experience, that does pose a much higher risk to PR, and ultimately can help begin to disrupt the loyalty towards a brand. And if we think towards, some of the companies that are doing it really well, companies such as Monzo, PayPal, Revolut, as well as TransferWise, albeit on a more global scale, do allow for a convenient and social experience when it comes to things like payments. The Fintechs' disruptive take on the industry has made them highly successful at social, in terms of developing social and mobile-first services that meet customer demands through things like peer-to-peer payments, loans, and social payments. We know that this is where the industry is headed, which is why smart financial institutions and fintech brands have begun to partner up, providing with the opportunity to grow these type of services while still hewing to the stable of well-established legacy roles. Again, that fundamental idea around that trust, reliability being so important when it comes to our finances. All of these brands need to have these in place before the innovations can develop. And we're seeing that these companies are paving the way in activities that big financial institutions should be adopting. Think about convenience, transparency, and overall just generally being more engagement with their customer base. And actually 81% is highlighted here of surveyed banks in the UK believe that customer experience and service quality are the bigger drivers of consumer acquisition retention than trust in large institutional brands. What we mean by that is it's not just it's not just being trust being that kind of fundamental point, but again that engagement being so integral to driving the acquisition of new customers and retaining your current ones. And I guess this brings us on to our final key trend, which is this idea of increased consumer expectation. As I said, trust has always played a major role with financial services. People need to trust their financial institutions more than any other brand. And as a result, they are constantly evaluating and re-evaluating your brand based on their prior experiences. This makes it incredibly important that you need to build long-lasting brand equity while also differentiating your value, not just in your products, but in how you communicate with your customers. Asserting your brand value while establishing yourself as a trusted and authoritative voice and differentiating yourself from a competition goes a long way to building your business, obtaining qualified leads and kind of engendering loyalty. These aren't new trends. I mean, these are fundamentally the building blocks of how to grow long-term brands. I guess, one of the key differences here is that we've gone from a well-controlled by brands to one where the consumer is in complete control. In fact, with mobile, consumers are not only in charge of who they choose to interact with, but actually also in terms of dictating the content that they see. And this increases the expectations of brands and demands that financial institutions differentiate themselves from providing deeper engagement and more seamless experiences. I just have to think around kind of my own expectations of brands, my loyalty demands and decisions. The things that used to feel reasonable, such as, next day delivery, are no longer setting the standard. You just have to look towards things like Amazon Prime, where, your actual, the ability to order something within an hour, that is the new standard and the new convenience to what we all expect from all customer services. So I guess what does it mean when it comes to financial institutions? It's probably the sense of the ease of payments, knowing that everything is secure while being treated in an individual way that demonstrates that every person's financial needs are unique. I guess ultimately it means that the services and communications that we receive need to be convenient and feel personalized so that we actually feel like brands are speaking to us. And the expectation that businesses be available to them wherever they are, whether they expand to customer relationships as well. And the multiple people that we surveyed, highlight that they're more likely to shop with a business that you can actually message directly. This idea of super swift, immediate convenience, and this does away with frustrating phone calls. Hours speaking, being on wait. Trying to speak to a representative, or in fact, trying to outsmart a bank's robo system by yelling operator into the phone. Something that I've tried many a time. I'm sure we can all attest to as well. And actually, at present, thanks in part to having had the time to normalize and gain significant scale, things like messaging is probably one of the most important and prominent manifestations of current customer and consumer expectations and preference. As other mediums such as voice assistants, your Alexas become more widespread, we're likely to see similar uptake here as well. And I guess, for financial services brands and institutions, it means that they need to be investing in new technologies in order to stay on top of current market trends, and again, to meet customers where they are with products and experiences that they've grown to expect. And I guess across all industries, the brands that we're seeing find success are those that truly invest in their brand and position as more than just a company. This idea of belief being a belief-driven brand. So consider this: 60%, 67% of consumers will buy from a brand for the first time, based solely on a brand's position on a controversial topic, with 60% saying that brands should make it easier to see its values and its position on important social issues at the point of sale. And I think, without going into it too deeply, but, the current social context as well is something that I think is an interesting reference point for this. I think probably to put it really plainly, people would like to align to brands that offer a lifestyle, commit to a purpose, or embody something more than just commercial success. Think around things like Tom's Shoes, Tesla, Apple, for instance. All these companies elicit feelings of loyalty, betterment, and a higher societal impact than merely selling a product. They've elevated themselves and created a point of differentiation that is relatable to consumers' core values. And this has never been more true of millennials as well. And this kind of study from the US highlights that millennials feel that contributions to causes, social issues that they care about is important when picking a financial institution. Add to this that 92% of Gen Zers trust reviews from an individual more so than branded advertising, right? This, we're all familiar with the extent that we value opinions more so than the communications we receive from brands. I guess one of the interesting developments here is that up to 74% of consumers actually refer back to social media before making a buying decision. Again, this idea of kind of social being, whether it be a close group, a close-knit group of our friends and peers, or a wider social circle who we relate to, we're often consulting these groups to help inform where to place our money. And I guess this often means that financial institutions need to offer, millennial-friendly enticements and to be aware of their brand reputation and image in a way that they may not have considered in the past. I guess the question we often get asked is, so what does this look like? Knowing that nearly, a quarter of these consumers believe that personal debt should be avoided at all costs, and that they are likely to feel brands are personally speaking to them about their interests. For example, here, a credit card company might offer a card with rewards, no annual fees, or something unique, unique perks like concert tickets, travel points, or kind of priority lane access. It might be also in the interest of financial services brands and institutions, to form partnerships with the brands that millennials know and love. Excuse me for 1 second. And I guess where this takes us really, and just to kind of summarize some of the things that we've kind of talked about today, is that we want our financial institutions to understand us. I think this is fundamentally important. Our needs, our wishes for the future, concerns. We want them to we want to be able to relate, to feel that they relate to us, to be served as a person, not necessarily a customer ID. And actually, what of this manifests in terms of that we expect a mobile-first service all of the time. And we want this to be personalized. And as a consumer, we have high standards when it comes to this experiences built on years of reliable structure and previous brand experiences. Today's consumers trends favor businesses that consistently stand for something. As I mentioned, this idea of value, belief-driven buyers. So brands need to think around how they can reach out authentically and tell their stories in a way which people can truly connect with. Your ability to do this well adds to that human factor, and personal feel. People miss from kind of the old days of finance. The idea of missing that bank clerk who understood what you were trying to where you were trying to save towards. That idea of having a personal connection. And ultimately, doing this successfully necessitates that brands shift from a strategy focused on their individual products to one focus on the people and customers who they're trying to reach. People don't want to interface with an institution. Me personally, and a lot of trends indicates that they want to talk to an individual. And as the slide highlights, and I think this pivot to understanding the motivation behind products is pretty key. It's not a mortgage. It is a home. It's not a loan. It's not just a bank loan. It's for something that is deeply personal, such as an education. And again, with a savings account, it's not just the rates they're getting, but it's actually how you're helping as an institution contribute to someone's future. And I would just like to end this talk on a success story. And hopefully the sound plays, but feel free to jump in if it doesn't.
So as a modern finance company, we offer student loan
It's lagging, James.
Any luck with the video there?
Yeah, it's just lagging. I think it's because it's screen share. But what if there was a URL of the video, potentially could send it through and I can push it out to everyone?
Absolutely, I'll be happy to share afterwards. The key bit with that is, the case study is from one of our kind of US partnership brands, which ultimately it's around, again, understanding where their customers are and meeting their expectations. But I'd really like to end it there, and would welcome any kind of feedback and questions from this point.
Yeah, well, thank you so much, because there's actually a lot of questions. So I think, which is a good sign. So yeah, firstly, thank you. But secondly, I think I'll just crack on and get some questions. We've had 2 questions, and it's actually something I'm really interested to find out more about as far as it's more from the B2B angle, because we're finding, actually, we spoke to Phil about this, your colleague Phil, about the B2B usage for brands. And I'm a big believer and user of Facebook for B2B audiences. But what's your take on, and specifically, there's a question here from Anna saying, how do these stats apply to B2B, where the purchase cycle is longer than the B2B financial services one? And there's another question which was kind of asking the same thing. So yeah, question really.
Yeah, I'm happy to take that question, and I'd first like to throw out a disclaimer that B2B is not my area of expertise, but I think happy to take that on board. I appreciate B2B purchase cycle is often a lot longer with maybe different types of consideration, but I think some of the trends we're talking about, they're also beyond financial services, right? I think the idea that we as consumers have different expectations from brands. And there needs to be new ways to service this. B2B purchase decisions aren't probably, from my understanding, aren't as, they aren't as considered or logical as you might expect. And actually, there's still this human element there to it as well. So I think even when providing B2B services, the need to be empathetic and understand what those businesses are trying to achieve will be key in helping to develop some of those propositions. And again, without really speaking kind of more from a top line perspective, is that we do see the expectations of all consumers change over time, which is being defined by industries outside of financial services. So I guess it comes down to, how are you currently looking at your sales cycle maybe for B2B products, and actually what are the new and ever changing needs of the customers there, even in a business context. Are there new ways or new expectations which those customers have? And, does it call for a kind of reevaluation of how you're currently connecting with them? Appreciate I may have not answered that question quite directly, but, it hopefully can maybe spark some form of debate there.
No, you're entirely right. And actually, one of the things with, I saying that's why I spoke to Phil, because you put us on to Phil, and for everyone else, Phil is one of James's colleagues, and is doing a lot of exciting stuff in the B2B specific world of how Facebook can help. And one of the things we've been doing is actually almost bringing together LinkedIn. So bringing together LinkedIn's like data, which is really great for B2B audiences, but then using Facebook's experience platforms. I think, Facebook has just an absolute, just world-class platform. Is WhatsApp, Instagram, Facebook, the live streaming element, and then using Facebook's really fantastic experience platform to create more curated B2B experiences. And I think it leads on quite nicely to another question. And actually, we are going to, in talks, to do a webinar about this very topic with Facebook. It's still negotiating exact topic, but that will be addressed in a lot more detail. So watch this space. And I just had another question, and there's two on B2Bs. I think we answered those two. We had one from George asking about how thoughts on how social media might overlap / complement IoT innovations in finance.
Yeah, absolutely. I mean, I think that's a really a good call out here, and I think I probably think more from a product level here as well, because I mentioned there around this expectation of personalization, and that's not just in the Facebook's core service, but how you develop out things in terms of, say, WhatsApp payments, messaging as a whole. And some of the brands we work with are using the Internet of Things to develop their own propositions. For example, using smart homes and technology to almost determine how much you're going to pay on a bill. Facebook's really a platform that can help to bring maybe some of these core services more to life through communicating with your existing customers. For example, if we are say you move onto flexible tariffs, and actually how you update people when they move across, based on a broader technology built on the Internet of Things. They're probably some of the more immediate use cases I can think of, but I think, again, that's an ever-changing space. And I think that's probably where we're seeing a mass amount of innovation from Fintechs at the moment, which, again, is just perpetually building on those new technologies to develop new service propositions. We're there to connect between the businesses and the consumers, if you like.
I have one more question, which is kind of relating to the COVID situation. Is Facebook as a platform, my experience, is really great in creating these continued experiences, like these content experiences, which are kind of just ongoing, whatever whatever service you're using. What kind of advice would you give to, if you're marketing and finance and communications? How do you go about curating these experiences on Facebook? Because at the moment, it's kind of like, we're still almost like, okay, I'll put a post up on Facebook, I'll put a picture up. But what the dream is to have a really deeply personalized experience using Facebook with B2B or finance, quite heavy related content. So I'm just wondering what your thoughts were around that, going into building that kind of experience on Facebook for people as they browse. Yeah,
I mean, that's a really good question, James. And it's something that we do get asked a lot, right? Which is, how can we best leverage the technology that Facebook offers to complete some of these things? And I know we were actually talking the other day about something similar as well. And my perspective on this is that you really truly need to understand what your current customer ecosystem looks like. Where are the pain points and friction points? And I think that's probably where Facebook can then begin to help. So you think around your current customer ecosystem, from initial communication to transaction to onboarding to potential renewal. And actually, how can you take some of those elements where friction is, and using things like automation and personalization, begin to break them down? And I think that's where Facebook can really be a key player. And again, in the presentation, I did talk about Messenger and things like that. This idea that we have the expectation of instant experiences. And I think, that's, again, looking at your customers, funnel and cycle, how can you maybe begin to introduce that to maybe automate, save time, and ultimately, reduce some of the friction they're experiencing, and, help to improve, I guess, return and sentiment towards the brand with some of these things. I think they also produce quite good points of differentiation in competitive markets. And I would, encourage people to look towards what are people within the broader sector doing in that space. And I think, that's where long-term brand planning and looking at some of those experiences can help to, create that point of differentiation for brands moving forward too.
Yeah, and that's a really interesting topic. And yeah, thank you, James. I could ask questions all day, but we do have a podcast chat coming out very soon. And we are going to be definitely working on, I think there's a massive demand for, particularly in finance, for B2B, about how Facebook can be utilized more. So I'm really looking forward to seeing what comes out from Facebook, and hopefully we can collaborate. But what's the best way of people, I suppose, continuing the conversation with you? Is there a particular preferred channel, or how do people kind of, if they have any questions?
Well, yeah, no, that's a great shout. I mean, if people want to reach out, find me on LinkedIn. I'll feel free to communicate there. Happy to take any questions, and of course, stay connected through James, who's done a brilliant job at organising today's events. And really, I guess ultimately it's great to use these things as an opportunity to create a platform and a voice for people in financial services, which is something to definitely be celebrated and enjoyed. So,
yeah. Well, thank you very much, James. I really appreciate it. And yeah, we'll be in touch soon.